Hey everyone, it's Blair here at Time Trades. Thanks for joining me this weekend. Today is Sunday, August 21st, and this is your weekly video. I'd like to start with a few quick announcements before we get into it here. First is that there will be no video next week. I am on vacation and won't be in a place where I can do a recording. So this will be the last video for the next 2 weeks. We'll talk to you again in early September. Okay, so I want to give a quick update on the roadmap. A couple of weeks ago, I talked about the objectives for the time trade service and how I wanted to continue to improve things. And we've made some good progress towards those goals. The influencer calculation is now automated, so that is happening regularly. We're doing 8 symbols per day are having the influencers updated and calculated. And in the process of doing that, we also fixed a bug on the calendar tab. So that's been done. There's a total of about 35 symbols that have influencer data now, including a lot of the major symbols there. So feel free to check out the influencer tab for these. And you can learn a little bit about which astrological events are having the most influence over price highs, price lows, and big moves. There's still a little bit of work to do here. I do want to improve the user interface to display the symbols that have influencer data calculated for them, because not all of them do. And this is all working towards the goal of displaying those key influencers on intraday TradingView charts so that you've got some visibility there to what are the major astrological events that are coming up. So that's not started yet, but the foundation is in place to make that happen. Okay. The other thing that we succeeded in completing this week is creating TradingView scripts for key historical time periods. So this is mostly complete. It's done for 1927, 29, 74, 87. And I'll wrap that up today with 2017 data as well. So what this is a version of the TradingView script that spans those key historical time periods, usually when there's big crashes. This is part of the paid time trade subscription. It's not in the free trial. It's just too much manual effort for me to provision scripts for free trials. So this is in the paid service. Okay, so that's the roadmap update. Let's go and take a look at our forecast here, starting in TradingView, and we can get an update on this yellow path of price that we first drew out 2 weeks ago. So this was done based on Gann waves, and the Gann waves are turned on. You can see here we've got the time trade script on the chart. Gann waves are turned on, magic levels are turned on. And the Gann waves are the yellow and blue vertical lines. And typically, blue indicates lows, yellow indicates highs. And you can see here how price has generally been following that pattern, except until August 10th, right? Where the blue inverted and was higher than the previous yellow. So these inversions in Gann waves are really important because they do indicate extending trends. Okay, so the fact that we had a blue, which is by the book supposed to be slightly lower in price, it ends up being actually higher in price than yellow. That is an indicator that price is going up. So that was the basis for this yellow arrow pointing up to the next Gann wave on the 22nd here. So what we have seen in the past 3 days is the trend rolling over. We've gone from trending green Heikin-Ashi bars to red doji to red trending down Heikin-Ashi bars, and also sliding below the key magic level here at 13,400. So magic levels are probably the most important part of time trades in terms of understanding trend, and crosses of these magic levels have a lot of importance. So what we're seeing is a rollover in price a few days earlier than we expected. So this indicates there may be a little bit more weakness under the surface than what a lot of people think. So we did expect a bit of a rollover. We thought it would get started right around this Gann wave coming up on Monday, Tuesday. So the fact that it's coming earlier is important. And also there's a bunch of other stuff going on that's worth covering. And one of those is the cheat code. So I'm going to turn that on in the time trade script. And the cheat code indicates a lunar cycle, and it's a series of purple vertical timing lines as well as teal vertical timing lines. Now, the teal ones are special because they are halfway between eclipses, okay? And what we found with the cheat code is that if you go back in time, and I'm just going to turn off Gann waves here, okay? So we're going to add a bit of clarity. If you go back in time and you look at where the teal lines happen, typically they do indicate major pivots. So as we scroll back, we can see here back in February, there was a pair of teal lines. Obviously, the first one on February 10th, I'd say that was a medium-sized pivot, not a major one. But February 24th was significant. It did happen at a price that was retested later and held strongly and provided the support for a big boost up back to 15,000. So that was one example of teal lines. Here's another example of a major pivot at a teal line, August 31st, 2021. You can see what happened after that. There was a multi-week correction down into October, which preceded the final push up into all-time highs. So what else? We can keep going back to March 2021. Again, here's another great example of a major pivot at a teal line and a magic level, and then price boosted strongly out of there. Keep going back some more. September 14th, this was another pair of teal lines. And again, these teal lines are midpoints between eclipses, okay? So this indicated another major pivot with the actual low occurring exactly between the two teal lines. So another significant timing point there. And then finally, we've got to go all the way back to the COVID low, and we had a teal line occur within basically 3 days of the COVID low over here. So this is a very powerful timing cycle, and the fact that we are getting some red right here, right in the middle of a pair of teal lines, leads me to indicate that this bear market rally we are in is ending and rolling over, and the bear market will be resuming. Now, I'm sure there'll be lots of fake outs and moves up along the way just to suck in some more bulls. But from a timing perspective, this is a great place to start a new bear trend. Okay, the other reason why I'm bearish heading into September is Mercury. And we've talked about this before. If we go over to the time trades web application, we can see here we've got Mercury speed displayed on the chart. So this is showing cheat codes, magic levels, and short-term waves. And the short-term waves is really what we want to look at. So I'm going to turn off the cheat code lines again, just to keep things clear. And there's two lines displayed in short-term waves. Yellow is Mercury speed relative to Earth, and blue is Mercury Venus separation in degrees. Okay, so what you see here is Mercury slowing down relative to Earth, and when it crosses this white line over here that says 0, might be a little small, but it does say 0, this little white line here, this is when it goes retrograde. And a lot of astrologers do pay close attention to Mercury retrograde periods. But what I've found is that Mercury slowing is a powerful indicator of price declines. And we can go back in time and we can see that here. So we can see here Mercury slowing in April and how price declined during that period. And we can also see Mercury slowing back in December and how price declined during that period and how a lot of the decline happened before the retrograde cycle. So Mercury retrograde is important, but it's not everything. And often by the time retrograde actually happens, a lot of the decline is already baked in. Okay, so there's a number of reasons why I'm bearish, and that's a quick summary. So what do we think is going to be happening next? Well, we've got this path of price here, which, you know, it was maybe 3/4 right. It was only kind of became wrong on the last 3 trading days there. So that wasn't too bad an effort. But I do think that looking ahead, we can confidently look for some lower prices as we head into the next Gann wave blue line, which is going to happen in around September 7th, September 6th, September 7th, around here. Okay, so I'm just going to put in an arrow here indicating that. And where is that? All right, there we go. Okay, so looking ahead, I'm going to update this forecast, and we're going to go down from the low here to now. This is not to scale. Okay, so when I draw these arrows, it's just directional. It's not making an implied price forecast at all. So I'm just going to put it right in the middle of this magic level cycle. But there's nothing really implied by that at all. And all I want to do is indicate my bearish bias as we head into the next Gann wave blue period on September 7th. Okay, so that's the updated forecast there for the NASDAQ futures. So that with that out of the way, let's go and take a look at time trades here, and we're going to take a look at some of the other major indexes. Let's take a look at SPDRs. Okay, so we're going to turn off short-term waves here, and we're going to just take a look here at SPDRs. Again, we can see that there's what looks like the start of a pivot right in the middle of the cheat code teal lines. We've got a big pivot low over here, peaking September 20th. That seems to be a key date appearing in a lot of the major indexes, September 20th. And we can see a big cluster of green here indicating that maybe a sharp rally coming out of that period. So those are really the highlights here. I don't like to put too much emphasis on these red probabilities because they are isolated, they are singles, they're not clusters. But that being said, the basis of the bearish forecast does not come from these individual red bars. It comes from the overall context that we're looking at and the time cycles that we just talked about. So let's take a look at the Dow. The Dow has a few more clusters here of red, and there's a potential pivot high here, September 1st. Do we have the same pivot lows around September 19th, 20th? We do, but it looks like they're lower probability. So certainly there's more red than green here, but again, it's really the context that's making me bearish on the Dow and on stocks in general. Let's take a look at IWM. IWM certainly has a lot more red than green on the chart. But that is contradicted by a pivot high over here on September 22nd. This looked like a good candidate for an inversion because we see this cluster of increasing moves down combined with a pivot high. So, you know, when you're looking at these pivots, understand that there's two pieces of information that's encoded in them, right? Number one is we expect a pivot on this day, and number two is we expect this to be a pivot high on this day. So it's possible for the pivot high part of the forecast to be incorrect, but the pivot part of the forecast to be correct. So that's what I call an inversion, where it's wrong, but it's 180 degrees wrong. So I think that could happen here, given everything else that we're seeing, and this is why it's so important to look at context first before you dive into the individual probabilities of the stocks. Okay, so that's IWM. Let's take a look at crypto quickly. So crypto was rejected strongly from this magic level, or at least Bitcoin was at 24,300, and also right in the middle of the teal line days. So again, this would indicate a likelihood of a major pivot. That being said, it looks like it's undergoing a bit of a bear market rally here after that strong flush down. So crypto is, in my opinion, the trend is down given the behavior around the magic levels. It was rejected at this white magic level, and it's crossed 1-2 magic levels already. Even though it's having a bit of a correction today, the path of least resistance, in my opinion, remains down for Bitcoin, at least if you're trading on a multi-day, multi-week time frame. And that seems to be supported by the probabilities as we look ahead into the future. We've got a big pivot low here, October 1st, and that is supported by this cluster of red in early October as well. Let's take a look at Ethereum. Now, Ethereum looks actually quite different from Bitcoin, which is unusual. They do tend to travel in unison, but unlike Bitcoin, Ethereum has crossed a couple of magic levels, going up from its low around 1,000 up to 1,900. And the last, but it did get rejected at 1,900, and it's crossed 2 magic levels now going down. And it looks like it's having a little bit of a bounce off of this 1,500 level here. That being said, it's very much a trader's market. And it's not something that personally fits my profile of the kind of trades I like to take, which are longer term swing trades. One recommendation I can make for great opinion with respect to crypto is go and check out Oz Industries. His Twitter and his service is very, very strong and very, very good with respect to crypto calls. So that's very complementary to the Time Trades data service. And if you think you would benefit from his expert interpretations of the market, I would direct you there. Okay, so that's Ethereum. Now, one of the things that I find really interesting right now is the US dollar. And I think that's really key to understanding the forecast here. And the US dollar in time trades is UUP. We use the US dollar index bullish fund ETF. So this is an ETF that tracks the US dollar. And one of the things, given my bearish bias, I'm always looking for ways to either confirm that or disprove that, right? So I like to look at US dollar, because if there is going to be some sort of sustained move down, then the money has to go somewhere, right? If it's leaving stocks, where is it going to go? And often the US dollar is that does benefit from that flight to safety. So when what I'm looking for here is there any sort of moves up in the forecast that would indicate a potential flight to safety? And we do see two very big clusters of green here starting in late August, and then again around late September, going into a pivot high in early October, October 3rd. So starting with this pivot low, October 24th, we can see two clusters of probable moves up into a high either October 3rd or October 17th. So there does seem to be some indication or confirmation, I should say, of a potential flight to safety trade here in the US dollar. So that's yet another reason for my bearish bias going forward. Okay. All right. So with that, let's conclude the call with a review of HCL. So this is the Indian stock that we've been tracking lately. It's shopping higher, really struggling to move up. And we see increasing probabilities in moves down through, again, peaking September 19th, 20th, around there. So looks like September 22nd, there's a peak. September 16th, there's a peak. So again, this, even though it's been moving up over the last 3 weeks, this does not look very healthy if you're a bull, and it looks like it has just filled this gap that was opened up back here July 11th. So this stock is running out of reasons to go up, and the time trades forecast is really quite one-sided and quite clear here. So looks like a nice short opportunity here on HCLTECH. Okay, so that's it for this week. Again, no video next week. I look forward to chatting with you in 2 weeks. Good luck and trade safe. Thank you.